Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Cucchiara, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Cucchiara.
Welcome in. This is Cucchiara with Real Estate Radio Live, the podcast series. Today we are going to be talking about why now it might be a great time to upgrade your property and add square footage. Some might say, well, why would that be when the rates have gone up a little bit? And I'm going to talk a little bit about why that might be and why there's some good ideas and some suggestions. Before we get started on that, just a reminder, we are with you 5 days a week with these podcasts, and you could tune in. If you want more information, you can go to 𝗟𝗓𝗡𝗙𝗀.com. If you need any help in your financing, that's what I'm here to do for you. On the mortgage side, I could help you with your purchase finances, refinancing, any kind of property-related financing. I can help you with that. You can contact me at 408-838-9060, or you can go to 𝗟𝗓𝗡𝗙𝗀.com. And lastly, give us a review, if you would, when you get a chance. We'd love to hear what you think about our podcast series. Go to iTunes, or you could simply go to our website at 𝗟𝗓𝗡𝗙𝗀.com and navigate yourself around to give us a review. Tell us what you think. We would love to hear from you for sure. So the topic today, again, why might now be a great time to upgrade your property or add square footage? That's the question I'm going to throw out to you. We're going to talk a little bit about that today and get you thinking a little bit. Conventional wisdom might be thinking or saying or sitting back going, well, why would now be a good time to do that when interest rates are a little bit higher? And I will give you a couple of those reasons. And automatically, one of the things that we found in the market over the last couple of years with the interest rates being so low and people taking advantage of refinances and also a lot of the equity growth that people have in their home. And I want to specifically talk to the Bay Area again. I have to be careful about that on these podcasts and understand that people listen to these from all over the world. So specifically, unless we detail or talk about something different, in general, I'm most of the time talking about the greater Bay Area here in Northern California, Silicon Valley, as it relates to the real estate market. And we've had a great market, a lot of valuation, a lot of improvement in equity. Interest rates have been great. It's been a great environment all over for real estate. Now, with rates being up a little bit, believe it or not, I know this is going to sound funny, but it is still a strong business area and people do make a good living over here. But things are going to start slowing down on the contractor side going into 2017. You could already see some of the things that are happening. And so what happens when you have more competition, I should say, on the contractor side, you're going to be able to negotiate some better terms when adding square footage or maybe doing an add-on or a remodel of your home. I don't know if a lot of you experience this, but I have, and I know a lot of clients and people that have that I know, they're interested in remodeling, adding on, or remodeling their home. And they start getting bids from particular contractors, and they find out, first of all, they're shocked because the bids are so high and they're so expensive in this area because the cost of doing business is so expensive here. That's the first reason. The second reason the bids are so high in most cases is because these people have all the business they can handle. So what they do, I know this doesn't make it right or wrong, but here's what contractors do when they're busy. Let's say that their average cost per square foot is $250 a square foot. Let's say they give you a bid on average of $250 a square foot to do a project for sake of this conversation. Now, let's say they're busy as all get up and they have jobs on the books for the next year and a half, and they can't take any more business. They're busy. They'll still do bids. Some of them will still do bids. The difference is they will see how bad you want that project done. And you may be right or wrong, but they'll do something like this. They'll say, yes, I'll bid on the job. They'll bid on the job. And so let's say the average was $250, and now they're telling you it's going to be $325 to $350 a square foot. And you want to say, are you kidding me? This is ridiculous. Why is it so high? The reason it's so high is that they have all the work they could take. And so they're really just testing the market to see what it will bear. And I know this sounds crazy, but if they have a job on the books and they throw a crazy number out there to you, like $325 or $350 a square foot, and, you know, again, that's not so crazy if it's custom stuff, don't get me wrong, but let's just say, for example, they bid $100 more a square foot than normal. And someone takes it. Someone says, okay, let's get started. When can we get started? Now the contractor has a decision to make. Do they go back and they procrastinate, or do they back off or slow down a job that they're already working off, or take resources and take manpower off a job to start another job because the profit margins are so great? This is what they do. And this is what gets them in a lot of trouble, and you have to be really careful with this, what happens in the contractor community. You see this quite a bit when things are good and it's busy. They'll take on a job because someone's paying them a ridiculous premium because they want something done by a certain period of time. And then what they do is they overcommit. And they get themselves in a lot of trouble. Anybody that's had any experience with contractors, you know, I don't know. I mean, I don't know what the percentage is, but I'll bet you 50, 60% of the time they go past their commitments, both on price and time. It just changes. Honestly, very few contractors are responsible business people, and I don't mean that as a judgment statement as much as I mean as an observation, and most people would agree. They may be great people that design some beautiful homes, but the business sense and planning sense and scheduling is usually not their strong points, and that's why a lot of these people that do well in the contracting business, they hire support staff that helps manage their calendars and their time so they don't get caught into these routines where they're over promising and under and delivering, and that's a lot of times what happens. So this is kind of the typical MO. This is what happens. I'm taking you through this process. When things slow down, now that rates are up a little bit and the market's flattened a little bit, and it's more of a normal market, I do think, again, you are going to be able to have a better chance to get some decent offers on some projects to be done now in 2017. I'm not saying it's going to just drop off the cliff and you're going to be able to get these incredible prices and because no one's working anymore. But you are going to have more contractors now in 2017, which should have a little more time on their hands, not all of them, but that should equate to you being able to negotiate some better deals for that. The other reason you want to think about potentially upgrading or remodeling or adding onto your home is purely just the cost per square foot versus what the value of your home is. Now, someone might say, Joe, that's great, but the value of my home really has no meaning until I go to sell my home or leverage money. And that's true for the most part. So my question is, if you're in an area or if you're in a location where, let's say, the cost per square foot of selling your home in a certain area is $600 a square foot, if that's what it's going for, and that's not too uncommon in decent areas, sometimes it goes a lot higher, $600 a square foot. So you have 1,000 square feet of living space. That's, do the math, that's $600,000. And you want to add an extra bedroom or a bathroom or maybe additional or maybe a remodel or add-on. If the cost to rebuild or the cost to construct, the cost to add square footage to your current property is, say, $250 a square foot, but yet the value of that done product, the complete product square footage is $600 a square foot, do the math. That is an outstanding return on investment. That is a great return on investment. Now, again, you have to be careful. This is only valuable when you go to sell the home or when you're leveraging money from the home. But if you're in a position where you want to add that new kitchen, you want to add that master bedroom or master bath, you want to add that second story, you want to do some things to your property, now is a good time to do that. Yes, even though the rates are a little bit higher. And these are the reasons. I just told you, I think you're going to get some better bids. You're going to have some more competitive bids with contractors. You're going to have some opportunities there. And also the price of some of these materials are coming down a little bit. And I think there's some benefits there. And the other part is if you work on a construction type loan with the housing prices like they are, the appreciation that have gained so much over the last couple of years, you're going to benefit from appraised values. And I'm going to get more into that on the second part of this podcast. We're going to take a quick break in a minute. When I come back, I'm going to talk about how you benefit from putting additional money into your home when you're trying to leverage money. You get to be a little bit creative. If someone just has cash, that's one thing. If someone says, I'm going to put $300,000 in my house and they're just going to pull it from their savings, then that's fine. That's a totally different story. But if someone does a bid and looks at a project and they say, this is going to cost me $300,000, and they come to someone like me and they say, Joe, how am I going to get this $300,000 out of my house? I need to do that because I want to reinvest back in my house. Then we're talking about a whole different process. And so that's what I'm going to talk about when we come back from a quick break. The topic today is why is now a great time to upgrade your property or add square footage. This is Joe 𝗘𝘀𝗁 with Real Estate Radio Live. We'll be back with you in just a minute.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com.
Hi, this is Joe 𝗘𝗀𝗓, host of Real Estate Radio Live and Bay Area Mortgage Planner. In addition to being your home financing expert, please remember you could always contact me for other trusted advisors such as realtors, financial planners, and CPAs. Please feel free to contact me at 408-838-9060. That's 408-838-9060, or email joe at RERadiolive.com, or visit my website at RERadiolive.com for more details.
Welcome back to Real Estate Radio Live. For more information on today's topic or guests, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Joe 𝗘𝗀𝗓.
Welcome back. This is Joe 𝗘𝗀𝗓 with Real Estate Radio Live, the podcast series coming to you every single day, 5 days a week, with our podcasts on education and information. The topic today is why would now or might now be a great time to upgrade your property or add square footage, remodel, and going through those reasons why now might be the great time to do that. Before we jump back in, again, if you need any help on financing with your purchase, your refinancing, I'm here to help you with that, 408-838-9060, or you can go to the website, RERadiolive.com, and reach me that way. So the point I want to cover now in the second part of this podcast is I talked about why it might be a great time and why you might want to consider adding on, upgrading, remodeling, adding square footage to your home right now. So now let's talk a little bit about how the financing of this potentially works. Just as we were ending the first segment here of the podcast, I talked about the simple part is if you have a $300,000 project and that's what it's going to cost you, and you have it in your savings or your investments, and it makes sense to use that, and that's the best use of that money, then it's easy. Then you access the money, you start the project, and you move forward. What I want to talk about a little bit is what if you don't have that money accessible, or what if most financial planners would tell you be very, very careful about taking money from investments, savings, assets that are investable assets and removing them from that vehicle to put back into your home. The reason why you want to be careful with something like this is, let's say you have $300,000 in a investment account, and let's say it's giving you an average return of 7-8% a year. It's a lot of money. that compounds each year over year over year. You could do the math. That's you have an investment opportunity. Now, if you take that same $300,000 and you remove it from the ability to make 7 or 8% a year, and you put it in your house, someone might say, "Be careful with that, because now you've taken away the opportunity to gain that 7 or 8% a year." The person on the other side would play devil's advocate and say, "Well, wait a minute now. If you look at the average appreciation of home prices over the last 2 or 3 decades in Santa Clara County or the Bay Area, that's been about the appreciation rate of 7 or 8%. So you might say, okay, it's a trade-off. I'm taking one from here and moving it to another, and I'm still getting some return on my investment. The difference is there's really nothing you could do at the moment with the appreciation in your home. Certainly it's great. It's great when you go to sell your house. It's great when you're leveraging assets. So the first thing I would say, before you decide to figure out where that money is coming from for this $300,000 project, consult your financial planner, your CPA, people who are close to you, and get ideas. My personal preference, and again, it just depends. Everybody's different because it will depend on how much equity you have in your home, how much leverage you have, what your income's like. If all things being equal, I would say always, 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 if you can, if it makes sense, take money out of your own property to put back into your property. And so what I mean by that is, let's say you have a $300,000 mortgage right now, and you have a project to get $300,000 to add on another 1,000, let's say 1,000 square feet, for sake of conversation. And it's a big project. You're going to add 1,000 square feet, and it's going to cost you $300,000, and your home is worth 1.5. Let's say it's worth $1 million now. You owe $300,000, so you have a good amount of equity in that home. You could do two things. You could either take a $300,000 home equity line out, or you could take $300,000, cash out, consolidate, and end up with one loan of $600,000, and now you make your way into your project of $300,000 cost. The benefit of using your home equity to reinvest in your home is just what I mentioned. Really, you're taking assets from your appreciating asset, that being your home, if you follow me. Your home is an appreciating asset for the most part. I realize there's no guarantee. It could depreciate. I realize that. But for the most part, over year, your home is an appreciating asset. Here is the difference in an appreciating asset and a mortgage in a home versus an appreciating assets in an investment or savings account. If you have a $300,000 or a $600,000 loan on your property, let's say $600,000 because this is the project we're talking about. You have a $600,000 loan lien on your property, but because of the remodel and the upgrade, your home is now worth $1.5 million. Guess what your home's appreciating asset becomes? It does not become the $600,000 mortgage. That is your liability. The asset is $1.5 million. That is your appreciating asset. So if you do the math, $1.5 million at 7 or 8%, do the math on that. That's a nice appreciation. Remember, the 7 to 8% is not on the $600,000. It's on the 1.5. So these are the things you really have to think about and consider when you're working on these projects or trying to figure out where you access money and how you leverage money to best facilitate these projects. I would strongly consider, if you're ever going to do something like this, if you have the equity, pull the money out of your home and reinvest it in your home. I really am a big believer in that. I think most financial planners, most people that want to try to diversify and preserve money and capital will tell you to do the same thing. And it's because of that reason, because you're reinvesting into that home and you're upgrading that home, which makes it more valuable. Let's say you did the other thing. let's say the other option was take the $300,000 from an investment account, keep your $300,000 loan the way it is, take the $300,000 out of your investment and invest it into your home. What have you just done? Nothing wrong with it, but let's talk about what you just did. What you just did is took away $300,000 of investable assets out of a plan or a program, and you've reinvested that money back into a property that when you're done, remember, it's still a $1.5 million appreciating asset. So follow me here. I don't want to lose you, but listen. So if you did scenario B where you took $300,000 from your savings or investments and you invested into your home, you end up with a $300,000 loan and you still have a appreciating asset of $1.5 million. What are you missing? Think about it. What you're missing is that $300,000 that you just took from your investments is no longer making money for you. That's right. No longer making money from you. Remember, the appreciating asset at 1.5%, that is what you're making money on. It's not your loan. Your loan is a liability that you're carrying. You have to service that debt, and there's a cost to that debt. Don't get me wrong. But as far as an appreciating asset, it is the $1.5 million. So I'm going to ask you this. What would you rather have? And again, this is a neat exercise to go through. What would you rather have? Would you rather have a $300,000 in your investments that's going to continue working at 7 or 8% a year for you, and a $600,000 loan, and a $1.5 million appreciating asset? So now remember, you have the appreciating asset at 1.5. You still have your $300,000 working for you over here in this corner at 7 or 8% return, and you have a $600,000 liability, of which 100% of your interest and your property tax is tax deductible. You're going to have to figure that in as well. Do you want that, or do you want a $300,000 loan coming from your assets and a $300,000 final loan on your property, which would leave you with a $1.5 million appreciating asset? That's the same. That will stay. The difference is now is you have done away with and you have eliminated your $300,000 appreciating assets on the investment side. In other words, you took that from your investment portfolio, you reinvested in your home. Again, it's not a right or wrong. What is the better financial move for you is really what I'm going to discuss and what I am discussing. So as we wrap up this show, I want to encourage you to think about upgrading. If you want to remodel, if you want to add on, it's a great time to do it. Rates are still good. I wanted to just take you through the process and why it's a good time to do it and how you access the money to do it and what's the smart way to use money to do an add-on, a remodel, or when you're doing adding some additional square footage. Always, always, always consult with your financial planner, your CPA, people that are close to you, you trust. And if you don't have a financial planner or a CPA, seriously, call on me to do that. I could recommend some people to you that are going to help you make some of these decisions. When you go to make such a important decision, you've heard me say this before, do not do it emotionally. Do it logically. Put the pencil or pen to paper. Make sure it makes sense. Consult with the right people. Move forward and feel comfortable with what you're doing for sure. All right, it's time for us to sign off. I want to thank you again. The series again was quickly, is it a great time? I think it is. Use the money, leverage the money, use it against your home if you can. Until next time, this is Joe Cucchiara with Real Estate Radio Live, the podcast series. Take care.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.